everyone. Good evening. I'm sorry we have a little background noise tonight. I've got National Grid out my window digging up my street, and they're very noisy. So I hope you can't hear them as I can right in my ear. Anyhow, tonight we're starting on Chapter 16, which is the Statement of Cash Flows. This is not a terribly long or terribly difficult chapter. It's pretty straightforward. In the next two videos, I give you examples of statements of cash flows, but I'm going to go through some of the highlights within the chapter, just to sort of provide you some background information and some terminology. So it starts on page 834, chapter 16. So from 834 to 837 is the first section. What is the statement of cash flows? What's the purpose of it? The classification of the statement of cash flows. This is all within those pages. Slides are 16:5 to 16:11. What is the statement of cash flows? It's actually a financial statement. It's the fourth financial statement. You know, we've been doing the three the whole time: the income statement, the balance sheet. The statement of stockholders' equity now, and the balance sheet is the third one. We've been doing that since chapter 1. And back in chapter 1 in 101, they do, right at the end of the chapter, introduce that fourth financial statement, the statement of cash flows. But we're not really supposed to teach that to you until now, because many of the things that appear on the statement of cash flows are taught in 102, such as gains and losses from selling plant assets, and corporations selling stocks and paying dividends and buying back treasury stock and all the things that we've had already. So now is a good time to introduce this fourth financial statement. So the classification, the third thing in this section, just shows you, and there's kind of a nice graphic of this on 835 at the bottom. It's 1611. And it shows you the three sections on the statement of cash flows. First section is operating activities that show that they're all about current assets and current liabilities, reporting on the day-to-day operations of the business. The second one is investing activities, and that would be buying and selling of your long-term assets, your plant assets. And the third one is financing, anything to do with financing your business, either through long-term loans, notes payable, taking them out or paying them off, or issuing equity, selling stocks, and also buying treasury stocks back from the public and paying of dividends. Okay? So those are the three sections. We're going to go into them a little bit. Also, and I kind of left out the purpose, is to show how and why cash changed from the beginning of the year to the end of the year. It takes net income and it changes it into cash flows from operations, investing, and financing activities. And the good news about the statement of cash flows is just by looking at a balance sheet for 2 years in a row called a comparative balance sheet, you might recall. If you look at the difference of cash, that's going to be the answer you come out with. That's going to be your change in cash at the bottom of the statement. So you always know if you're right when you make one out, because you can look and check the number and see what you're going for. Shall we show you what I mean in a couple of minutes? Okay, so they talk at the end of this section. This is 1612 and page 836. Let me catch up with myself here. Non-cash investing and financing activities. This is a small section, usually sometimes just one item to it the most. This either goes in the notes to the financial statements or at the bottom of the statement of cash flows. Most companies put it in the notes, but in this chapter you see it right on the statement. And this particular section, if necessary, offer events that have happened that didn't cause cash to be paid out this period, but they will next period. They give a couple of examples, And examples would be you bought equipment, signing a long-term note payable, but there's no payments due until the next period. You might have taken it out at the end of the year, and your payment isn't due, say, the end of the year is December, and it's not due till January. That would be an example to just show your reader that cash will be affected in the future, it needs to be paid out. Another example would be if someone gave you maybe a building or equipment in exchange for your common stock. Maybe an investor that wanted more stock and said, hey, I'll give you this building if you give me 50,000 shares of your common stock. Okay, that wouldn't cause cash to be paid out, but in the future you'd have to pay that person dividends on those shares. So those are the kind of things they're talking about. Okay? So the next section shows you the formats for the statement, how to prepare it. And it does introduce that there are two formats. I think I went too far. There's a nice section before I go on 1613. It's on also on page 836, that shows all of the items that go into each section. It's kind of a template. It's really good. You'll see it on page 836, or if you're looking at your slides number 13. The two formats are at the top of 837 on slide number 14. We're only going to use the first one, the indirect method. The reason for this is not because it's better than the other one called the direct method. 99.9% of all businesses use this indirect method. So the direct method used to be taught in the regular chapter, but now it's delegated to the appendix, which means we don't have to bother with it, essentially. There's nothing wrong with it, and the only difference comes in the operating section. That's really the only difference. But they choose to use, and it's a good choice because, like I say, almost every single business uses it. So we're going to be starting with whatever we got from net income. That's always the first step, and it's going to change from that net income to the net increase or decrease in cash. So what do you need to do your statement of cash flows? This is the next section, and this is at the bottom of 837, and it goes all the way. I hate when I drop my papers. 837 it starts. I wish I would have wrote the page number somewhere. To 837 to 839. Actually, you can keep going all the way to, am I saying, yeah, to 840, basically. Yes. So this section shows you the steps. So what we need to prepare, and you'll find this okay. Don't see it in the book. I see the steps. Okay. So on slide number 16, right? You'll see we need the income statement for the current year. We need a balance sheet from both the current year and the prior year. We need a comparative balance sheet. You'll see one on page 838. Okay. And we also need some additional information about some transactions. Changes in current assets and current liabilities, which we'll see on the comparative balance sheet. But also if dividends were paid, if they took out a note payable, if they sold something, what did they get for it? If they bought something, what did they pay for it? Things like that. So that's what they mean by additional information. So there's 5 steps they list right after the income statement on page 839, which is one of the other things you need, because you need to see the depreciation expense, because we're gonna be adding that back in, because it doesn't cause cash to be paid out. It's a non-cash expense that's deducted on the income statement. For Shop Mart, the depreciation expense was $20,000. So we're gonna be adding that back in because it's deducted on the income statement, didn't cause any cash to be paid out. So that's gonna be the first adjustment we make to the net income. But the 5 steps that are listed at the bottom of 839, just gonna go over real quickly at slide 17. Do the operating section first, which is considered the most important. It's also the most analytical, because you gotta analyze those changes, and I'll give you a real quick and easy way to do that. Okay? That it's very easy to remember. I'll get to that in a minute. We do like to see a positive number here, not a negative number. A negative number shows the opposite of strength. There's some holes there, right? You need to be financially strong and viable, and this section shows that strength, ability to carry the other 2 sections. They can be negative, and they often are negative. But your operating section needs to be positive. A company can't really survive two periods in a row of negative operating activities, really can't. So the second one, complete the investing section in the second section. The third section, complete the financing activities section. Again, the operating section, current assets, current liabilities, we're gonna be analyzing. The second one, investing, is all about selling and buying plant assets, those long-term assets. And then the financing would be any way you finance your business, either through debt or equity. Long-term payables, like notes, or selling stock, or paying dividends, or buying treasury stock, which is back from the public. That all causes cash to either come or go from you. They refer to that as inflows and outflows of cash. And then compute the change, which if you have your book open, if you look at Shop Mart, you can see 2018 they ended up with 22,000, and in 2017 they had 42,000. So they actually had a decrease in cash of 20,000, but that's not necessarily a bad thing. Right? But anyway, their cash went down, and we're going to see why when we do these 3 sections. We compute our change. We know what the answer is going to be. It's going to be a negative 20,000, and then a schedule for any non-cash activities will be at the bottom. I'm not sure if this problem has one. They show you the whole thing on the next page, page 840. Yep, they don't have any non-cash investing or financing activities, but one of the ones we're going to do in the lab problem examples does have it, so you get to see it. You'll see all 3 sections. They go through every single step from 840 all the way, and it's explained one thing at a time with illustrations, one thing at a time, one item, very nicely done, all the way to the net change in cash would be on 850. Okay. Oh, they do have non-cash. They do have some non-cash. Let me see. The last step is to, this is another company, Outdoors. I didn't see any. Shop Mart doesn't have them, but they do show you an example of a company called Outdoors Inc. that has some. So you do see that on the bottom of 850. And then the illustration is on 852. Okay. So, I'm not going to go over every single item. I'm just going to kind of give you a synopsis of it. Although it's a wonderful example, I'm doing 2 in the next 2 videos, so it's not really necessary. But you kind of follow the same method all the time. You start with the net income, you get it on the income statement, you add in depreciation in your operating section. What I wanted to mention that can be confusing sometimes, and I do mention it, I'm going to mention it when I do the lab problems, is you have to look if you had any sales of assets, long-term assets. If you did, that money's going to be in the investing, the second section, and you can see it says cash receipt for disposal of plant assets, $50,000. With that $50,000, there was a $10,000 gain because the book value was only $40. When you read the item, you can see that it was $40. They got $50 over book value, so they had a $10,000 gain. If there's a gain, you subtract that gain in the operating section to make the cash balance and come out right. Because if you just left it at 50, it wouldn't come out right. It'd be 10,000 over because of the gain. If it was a loss, you'd add it back in. So check out when you're doing your operating section, before you start analyzing your current assets and current liabilities for the changes, check out if you sold anything, okay? Even though you haven't done that section yet, see if you sold anything. Was it a gain or a loss? If it's a gain, subtract it. If it's a loss, add it in. Once that's done, you can look at your increases and decreases in your current assets and current liabilities. For some reason, they like to give you 2 of each. So again, I'm not going to go through every single one, but what I'm going to tell you about it is if current assets go down, you have less of them, raise the cash. Cash is going to be positive. It has a positive effect on cash. But if current assets go up, you're going to lower cash. Okay? Current assets in cash move in the opposite direction. As the current assets go up, the money goes down. As current assets drop from the beginning to the end of the period, cash goes up. They move the opposite way. And that's all you really have to remember about that. When you get to the current liabilities, it moves in the same direction. When you have current liabilities go up, cash goes up. When the current liabilities go down, cash goes down. So current assets, opposite direction. Current liabilities, same direction. So, I wanted to tell you one more, and of course in the financing, in the investing section, anything you bought or sold for long-term assets. The financing section, and they have quite a few things. What I wanted to tell you is one little issue you might have when doing the financing section. So let me just go to it. They have an example of it here. And if I can find it. Let me see. It's page 848, I wrote. And almost at the end of the chapter. Computing dividend payments. And this is slide 39. Sometimes, most of the time, I should say, they give you the dividends that they pay. That's nice because you just have to make a negative cash for the dividends paid. But sometimes they get a little cagey and they make you work for them, such as the one here, okay? If they say, supposing they don't tell you, right? The amount of dividend payments can be computed by analyzing retained earnings, okay? And there's a T account there, right? And they show you on slide 39, the formula being reversed around. And whenever you have to reverse around and solve for something else in an algebraic formula, it can become complicated. But this, if you have something like this in the homework where you have to figure out the dividends, this is a very surefire way of doing it. So ShopMart is looking, okay, we don't know. We see the beginning retained earnings at 80,000. We see the ending at 110. We know net income was 40,000. Of course, if they had net income, they didn't have net loss, so that's none. Dividends, we don't know. Say they don't tell us. What are we gonna do? Okay, we're gonna use our formula right, that we're used to using, beginning retained earnings, right, beginning equity plus net income minus dividends equals ending, and we're gonna solve it for dividends. Okay, so we have a different unknown, but it's the same formula. So I'm just gonna write this down for you. It's in the book. Again, it's slide 39 and it's the bottom of 848, but just kind of to highlight it. So they're saying, okay, beginning retained earnings, which we know, I'm using RE for a abbreviation, plus net income, don't mind my lousy writing, or minus net loss. We don't have a minus net loss here, we have a net income. Okay, minus dividends, I'll abbreviate, equals ending. Just like the statement of stockholders' equity, right? Okay, we know that's our formula for figuring out the ending equity. But in this case, this is the one we don't know, right? This is the question mark, and they show it in the T account. But if you switch it around and use the variables you have, you can solve for this and pretty easily figure it out. So I know it's right in the book here, but just for the sake of argument, I'm going to change this around and do the ending here at one, whoops, I forgot this wasn't taped. This is ending, right, retained earnings, right, equals net income, which is 40, right? Nope, 80, I'm sorry. Where am I getting 40? No. Ending retained earnings equals, the net income is 40. This is supposed to be beginning. I screwed it up, I'm sorry. Beginning, I named it in my note. Equals beginning plus net income, which is 40. That's the 40, okay? Minus dividends. So we're just switching the formula around to solve for dividends. So dividends would equal 120, which is this, minus from the other side, minus 110, and now we have it. Dividends equals $10,000. Now they don't do this to you all the time, but you might have one instance that you have to do this. It's not, nobody likes to rearrange formulas, but this is how you would do it. We're just solving for a different unknown. Okay? Again, most of the time they just give it to you, but I wanted to make you aware. Okay, so we're almost all set. Okay. Then we're going to get our change in cash, which again is negative 20. And you're going to see the proven out at the end on slide 41, page 850, with the cash balance at the beginning and the cash balance at the end and the negative 20,000. So that's all three sections. And again, you can go through them each, more slowly and carefully, just for the sake of time. I didn't go through every single one. Plus I do in the next two videos with the examples. The last thing is the free cash flow, a very easy formula on pages 852 and the top of 853. This just means that you're going to see what would be freed up in cash by taking your positive operating activities for whatever you got at the end of the year from doing this last financial statement, then minus out any planned purchases you have for plant assets, and they call it cash payments planned for investments in long-term assets. Do you plan on buying anything in the next period as far as your long-term assets? And then minus any cash dividends you plan on paying. So once that's the money that's going to be necessary from your operating activities, to sustain your financing and investing activities, see if there's anything left. That's your free cash flow. And it's supposed to be a projection. The weird thing is, in the last lab problem I do, they have one of these as, I think, a requirement 3. And it's kind of a weird one because they use the same numbers as in the statement of cash flows. It's not, they don't give you a projection, which is not how you're supposed to do this. It doesn't really have any meaning if you use the same numbers. But anyway, that formula is very easy to apply. So I think we're all set. That brings us to the end. As I say, it wasn't too long of a chapter. So I'll see you for our example videos coming up next. Let me know if you have any questions. Bye-bye.